We are back. My name is Vinnie. This guy over here, David Wright.
Happy to
Really
be here.
simple. We do this usually once a week, usually around 4 o'clock, giving you kind of the updates of what's going on with San Diego real estate. Please subscribe to whatever platform you're watching this on, and comment with any sort of questions that you might have, and we would love to answer those. We have the clicker going below. We'll talk about the real estate market. We'll talk about interest rates. We'll talk about all that good stuff. So, David, let's take away interest rates. How are we looking?
So for those of you who didn't know, the Fed was just in a meeting for the last 2 days on the 6th and the 7th. And if you've been watching our show for the last couple of months, we've been predicting that the Fed would do nothing at the next meeting. And they did nothing at the next meeting. And the Fed actually mentioned 22 times about waiting and being patient. So that kind of tells you something. If they're mentioning it 22 times about lowering rates and being waiting and patient, they may be a little patient. And once again, I don't think we're going to see changes till October. But the other news that came out is then we did a bond auction, and the bond auction did not have the turnout that we wanted. So that affected mortgage rates negatively. Mortgage rates changed today actually 2 different times. And then on top of that, there's possible trade deals that are going to be signed, which means the stock market started to rally, which took more money out of bonds, which once again brought interest rates up. So as you can see this list right here, and you compare this to last week, look, rates are up all the way across the board. And that's not good. Let me wipe this real quick. Get a little blurry there. And that's not good overall because we're getting ready to head into summertime and rates are still trending higher. And it looks at this point, seeing that also the initial jobless claims number that came out lower than anticipated, which means not as many people are hurting for jobs as before because they're not claiming their jobless claims. That makes the Fed think the labor market is stronger, which means, once again, interest rates not coming down in the near future unless something dramatically happens in the next couple of weeks.
When you say near future, so you're talking about in like the next month or so, right?
I'm talking about within the next 3 months.
Okay.
But I mean, the other thing, this is kind of key. When you're looking for a home right now, whoever you're working with, they better be following the market, because the majority of the clients I'm working with, we all locked in on Tuesday, right before the Fed released its final minutes, and the rates were lower. And once the Fed stuff was released, rates went up again. So you need to be watching the market closely right now because it is very volatile.
Yeah, so I think that would put us around May 1st. So you're probably, a little tick up. But you kind of, I mean, as you guys are aware, you if you watch this enough, the interest rates, they fluctuate on a daily basis. And the numbers here that we have here, they're going to vary. These are just kind of ballpark, right? So having a lender that actually go, okay, let's hold off for another week, or let's hold off for this, or how risk adverse are you? Do you really want to basically push it a little longer? Let's lock it in now, right? So understanding what's going on, and instead of just kind of going to that lender going, hey, you know what? Let's just basically, I want to go forward with it and let's lock in the property. It's the same thing when a property is listed for X price.
There we
right?
go.
If you're not working with someone that knows what's going on, they're going to say just offer at their list price. But if you know someone that knows what's going on and is actually talking on the other side, they might say, hey, you know what? There's opportunity here. We can go under their list price, or we can ask for a credit to offset, to buy down the rate or whatever it might be, right? So those kind of factors can play into your offer, just like when's the best time to lock in your rate, right? Factoring that kind of stuff in. And now with kind of David talking about the next 3 months, I mean, that would put us, after the summer, right?
Yeah. And that is about where I see you will probably see some movement, because we don't have anything. You need people to have, this is going to sound so terrible. You really need a little bit more chaos in the market, which no one's going to say, no, we don't need that anymore. You actually need that in the market to make more people want to buy bonds, to drive interest rates down. And at the same time, like Vinnie mentioned, you're going to go into the middle of summer, which is peak buying season. And if all of a sudden you see a slight like downtick, like Vinnie was going over the schedule here, as you can see, look, look back here, go back to the right, look down here. So as you start looking, like just go back a couple months from now, I mean, we had rates dipping down to 6.375, 6.25. You had all your FHA and VA down at 5.75. And now you have everything ticking much higher, and the buying power is harder to do right now. So you really do want to have a little bit of chaos in the market.
Yeah, and then also knowing, I mean, the micro markets in San Diego, right? There's some markets that are selling really fast and some markets that are taking a little longer to sell, right? Right now, we're at 5,400 properties active in the market.
That's a lot.
Relative to where we're at, but we're talking about that's still not that much. I mean,
not for the population, not for the population here, but so where were we 2 years ago, Vinny? Is there a way you can look that up? Because I think 2 years ago, there's no way.
We're roughly about 4,000, somewhere around there, okay. 4,200, 4,300. So I mean,
that's choices.
It's choices, right? I mean, and then before, I brought it up before COVID happened, we were at 12,000, right? So
1,200?
12,000.
12,000 listings.
Before COVID, and we thought that was a low market.
You're kidding me.
No. So that's why I say when we're talking about 5,400, yeah, it feels like a lot. I mean, it's all relative to the market that we're in right now, right? We've been sitting probably 46. Last year, I want to say we probably in the summer months, we peaked at what, like 6,000, I think? 40.
Yeah, 50, maybe. I don't even think we got that high. I don't think we got that high.
I mean, but we were feeling comfortable around 46. So, I mean, it's going up. And I mean, if you look at the detached market to the condo market, it's two totally different markets. If you're in the condo market, I mean, it's a lot slower than the detached market. I mean, that's just something to think about. And you still see the properties are selling, they're still going for. I mean, we saw last week the median detached price in San Diego is higher than it was the exact same time last year.
Well, the other thing is with that condo market right now, you're having more trouble than ever with insurance. Yeah. And a lot of those condo complexes are underinsured. And then you will have a lender work on your file. And then when they go to check the master insurance policy, they're like, oh, no, it doesn't qualify anymore, because you better be checking that day one. If you're working on buying a condo right now, your realtor and your lender better be a team, and they better be checking that master insurance policy, or you will not be closing.
Yeah, you really want, I mean, that should be one of the first things you do. I mean, if you're in a higher fire zone, I mean, I think we talked about this last time, is that's one of the things that we start doing with our people now, our clients. As soon as we get a contract, hey, do you have your insurance agent to talk to? Okay, that doesn't work out. This doesn't work out. Okay, well, I mean, so there's a lot of things. The market's changed in that sense. But guys, we're here. We want to help you out. We want to give you kind of insight. The summer months are going to get there. The old adage, we're going to get more inventory in the summer months. So we'll see how much we can push it. And the detached market, slower than we've been, but it's still, property is still selling. They price it right. It's the property's still selling.
And for those of you who've been watching us for a while, you know, there was a tip mentioned, I think it was a couple months ago, Vinny, you mentioned this, is if you're looking for good deals out there, go look at some of the properties that are seasoned and been on the market 60 plus days. Because those are the ones where you can probably get a good deal.
Yeah, I mean, and you have your realtor talk to the other side and see if there's flexibility. How motivated is that client? I mean, the worst they can say is pound sand, leave me alone, right? So anyways, guys, please subscribe, please share, comment below with any sort of question you might have for our next one. Thanks, guys.
Boom.